This conference will now be recorded.
What's up, guys? Matt here, Flex Trades. I hope everybody had a good Tuesday. Starting off with broad market SPY and QQQ. Near high a day close, kind of an opposite day of what we had yesterday, which, based on the last several candles, it's kind of been opposite days followed by opposite day, right? We had this strong candle followed by a weekday, strong candle followed by a weekday, strong candle followed by a weekday, strong candle today. So you kind of get what I'm getting at here. It's hard to really get a grip on what this is other than just chop. It's really just chop, and until we break this previous high, we're still in that digestion phase that I've been talking about, and my expectation is for that to continue within this range as I've been discussing. So far so good. Another thing that I do want to point out real quick, don't want to spend too much time on this because my thoughts are pretty much unchanged, but there is a pretty striking resemblance between this look here and the current look that we have. So it's just kind of something to keep in mind. I'm not necessarily predicting this type of move over the next several days, but it's definitely something that kind of pops up in the back of my mind. Yeah, I'm a big chart guy, I'm a big chart data guy, pattern recognition guy, and based on previous patterns, this is definitely standing out to me. So as you know, as long as we don't wash out too much, same thing I've been discussing, as long as this washout doesn't break us down through this ascending channel that we put in several weeks back, I think it's healthy. And I still think that the healthiest thing would be a back test toward this 560 mark. So it's just something to keep in mind. The line in the sand continues to be the low from last week down at 565. But that being said, if we do get a breakout, fresh breakout, then it's kind of back into that trend is your friend type of situation, and pretty similar thoughts with SPY QQQ. So I continue to implement that intraday buy stop strategy with puts, find something out of the money, a few dollars out of the money, and kind of stagger buy stops as price goes up. So ideally they don't fill, but it's more of just kind of an insurance play, an overnight, and in addition to overnight hedges as well. But just keep that in mind with broad market. Bitcoin, not a lot to update on here as well. Similar thoughts. We've had the pullback, digestion. Just want to continue to see this contract in on itself and eventually stair step our way back up toward this previous high, up from earlier this or last week's high up towards 66,000. But until then, just want to see us continue to contract. Ideally, we found our footing. Ideally, this is the temporary low and we don't slip too much further. But if we do, I don't want to see us give back too much in the way of gains from this ascending channel here. Pretty much same things I've been talking about. Same with IWM, small caps, thoughts pretty much unchanged. Just continuing this digestion phase and eventually get us a stair step up toward 222, 224, and then that's where the small cap landscape has a chance to really get some momentum. But so far so good. We've had this digestion phase. It's playing out so far into the anticipated range, and just want to see this continue for a few more days and eventually get that stair step look. Continuing on with NVIDIA, quite the move. Didn't really get much meat out of this move the last couple of days personally. Had a little bit of skin in the game, never really joined much more just because I didn't really trust it. And that's fine. I'm okay with that. I'd rather follow my rule set and be patient and just really wait for the setup that I'm comfortable with. And based on yesterday's wick and just the broad market not being fully not having that full conviction quite yet, kind of missed the last couple days, but that's okay. I still do believe that the next couple days can produce a little bit of some pullback, some digestion within the range of these last couple candles. Ideally, we get that anyways, a little bit of digestion in the last couple candles, and then we can stair step our way back up. So going forward, next couple days, really just want to see a little bit of pullback. Don't want to see too much, again, kind of that same thing that I've been discussing so much over the last couple weeks. this recent ascending channel, this move from 115 up toward 133 today, as long as we don't give back really more than like half of that, that would be ideal, but really kind of hold into the upper part of it would be the most ideal, and just get a little bit of pullback, a little bit of digestion within the last several days of candle, contract and stair step up. But there of course exists the possibility that we just continue and it just goes and ends up back testing the previous all-time high. That possibility does exist. It's something that I'm just have to live with. If that happens, that I'll miss the move, but that's just kind of the reality of my style of trading. So just to kind of rehash, I'm patient. I'm waiting for a little bit of digestion over the last couple candles. That's when I'll get some skin in the game because I love the setup. I love the big picture look, but it's just not a trend that I'm comfortable getting into up here. So a little bit of digestion would be ideal. And then this is really set up over the short term, next couple weeks to get that move up toward 140 into a fresh breakout. AVGO, excuse me, nice candle today. Been talking about this one. I've been discussing that 180 break and we got that break today, although not a whole bunch of chart data above it, but we did close above that previous high back here a couple weeks back. And now next big level is the all-time high break up toward a hair of below 183, it would appear. So that's kind of the next level I'm looking for. Kind of similar thoughts as NVIDIA. Would love to see a digestion day or two here. Just kind of, process the move over the last several days. It's been similar look to NVIDIA, this ascending look. Digest that for a couple days and then get us a little stair step action up toward that all-time high and then get a fresh breakout. But so far so good. It's constructive. At this time, I don't have much more than small skin in the game, just kind of anticipating the break. Don't want to get too ahead of myself until there's a little bit more confirmation. And the big confirmation is a break above this 183 level, and of course a back test after that. But that 183 break is where I'd be comfortable hitting more. BABA had a gap down. This one's tough. It's been tough. I've been trying to track it, follow it, give you theses, update these theses, and it's a weird situation. China, overseas, there's a lot of different components, dynamics to a setup to a stock like this one. So it makes it inherently more complicated. But we had to gap down. I think it's safe to say at this point that the digestion phase has begun. Kind of, knock on wood, fingers crossed, because it's China and who knows what can happen with these. But it would appear to be a comfortable, not too audacious of a forecast to say that the digestion phase has begun. So ideally, just, I'm just going to draw something. It's more or less just kind of random, but it's kind of what I can visualize over the next several days, couple weeks, get this pullback down toward 100, get into this gap. That's when I'll start getting a little bit more of a position. And then I would love to see eventually a washout down toward the mid 90s. And that's when I'll start to hit it a little bit heavier. But so far, so good. The second thesis that I've been outlining seems to be underway now. So kind of just continued fingers crossed that this kind of pullback digestion phase has begun and we can get some more chart data over the next several days that just kind of continue to play into that thesis. So just continuing to be patient with that at this time. PLTR, talked about this one yesterday. I've been talking about it for the last week now. We had that initial breakout move above 38, which I had discussed back here last week. Had that initial move from 38 up toward 40, a brief pullback day yesterday. And then I talked about that again yesterday. If we broke through yesterday and Friday's high, that I would join trend again. And that's exactly what I did. Fresh breakout today. And so just kind of pull back this chart back to, I think it was 2120, yeah, back here when we had that huge blow off move up toward 45. So naturally for me, that's kind of the next target. That's kind of the next logical target that I have in my mind. It's kind of a weird chart here. I know it's real condensed looking. Try to drag it out a little bit perhaps. Maybe that'll help. But just pulling back the chart, blowing this chart up, looking back as far back as IPO back in 2020 up to that initial blow off move to 45. And we've spent the last 3-4 years getting all the way back up to the spot. So logically, I would think that a retest of all-time highs is in the cards over the next several days, over the next week or so. So just continuing to ride this trend, trailing stop, so far so good. The trade is working for us. Oracle ORCL, nice candle today, had some skin in the game anticipating this move, and then at the break of that recent high got a little bit more. Still would love to see a little bit of digestion, but I'm not too pressed on that because it is a breakout chart. So, I'm comfortable having what I have. If we do end up gapping and getting that move to 180, low 180s tomorrow, I'll be happy with what I have. That being said, I do want to see a day or two inside this candle, 1-2 days, just kind of digest briefly, even a gap down tomorrow, followed by intraday, stair step high day break, and then break through today's high to set that up. But it is a breakout type of chart. I love the look. And, as long as the broad market doesn't pull back too far or, get any kind of serious crack over the next couple days, this one continues to be in a position to get a move up above 180, possibly into the mid 180s over the next couple days. So just kind of letting this trade work and not going to trip over myself at this time. Risk is toward today's lows, toward the low 170s is where my risk would be moving forward. And PYPL, pretty much what I've talked about over the last couple days, this kind of pullback, stair step up toward high, and then a break of that recent high, add into it. That's what I did today. Kind of anticipate a follow through move, like I've said, up toward 85, maybe higher. But like I normally say in this type of situation, I would love to just see 1 or 2 days within the range of the last couple days, a little bit of digestion, a little brief digestion, right? Little, just 1, maybe 2 days, just brief right there, and then have that follow through move. So that's ideal. But I've talked about this one ad nausea over the last week or 2 weeks. So just continue to let what I have work for itself and not trip over myself. Risk at this time is going to be this previous low down towards 76. And, for me, dips are good anywhere down toward that level. Not really tripping over myself. The bulk of this position is common stock or, in the money kind of intrinsic value type of options play. Just makes it easier for me. Don't really need to overthink it at that point. HOOD, nice candle today. Talked about this one last night. Talked about it a week ago, brought it up again last night. That 24 level being kind of that first key area. And then this previous level, this previous high from back in July of 25 being the significant level. And we broke that 24 level early. That was a comfortable spot adding into. And then that 25 break was another comfortable spot adding into, especially into dip strength, which we actually did have intraday. That 25 break, little brief pullback, call that some intraday strength, dip strength, and then followed through on that. So, and supported on volume too. Nice volume bar today. So again, a good chart, big picture. Actually, looking back on this chart, it's real impressive that the RSI hasn't really peaked out too much over the last year, as impressive as the stock's been. Sorry, just kind of noting that. But anyway, would love to see a digestion day into the upper part of today's range would be ideal. It's not necessary because this is kind of that kind of fresh breakout type of chart. So, the possibility does exist for a gap and go candle. Whoa. Not like that. More like that. Kind of that gap candle, that gap and go candle, get us up toward $27, $28, something like that. But if there is a gap down or if there is some kind of weakness tomorrow, as long as it kind of holds within the upper part of the range and then can stair step back up over the next couple days, that's what I'll be looking for. Risk at this time is going to be down toward 24. But so far, so good. It's healthy. not really tripping over myself. UPST, another one that I've talked about, continues to contract. A little bit of skin in the game, but the big level is up toward this previous high, a hair below 46. So not much more action for me to take other than that skin in the game until we get up toward that 46 level. But a break of that 46, and I continue to visualize a move up above 50 into the low to mid 50s over the next several days is what I can visualize with a setup like this. But like I said, not a whole lot of action at this time until we get to that 46 break, just that skin in the game, have that incentive to watch and have that feeler type of position, but don't want to get too ahead of it. And then DOCU, big gap up today, supported by volume. But what I want to do is pull back this chart a couple years, and you can see how significant the last couple, today's break was. Pull back this level here, just go back several years. This is another multi-year trough cycle, which today's candle kind of lifted us above. The next key level being right at today's highs, up toward 70, which is this high back here in early 2023. But today's gap cleared us over a clear resistance over the last couple years, which is that 65 area. I think it was around 60. Yes, around 65. Previous high 1, 2, 3, 4 times over the last couple years. You could really say 5 times over the last couple years. We've rejected off of that. And then today's candle gapped us above it. So a pretty strong statement candle today. Above 70, there's room toward 80. So would love to see a little bit of digestion into today's candle, but otherwise a break of today's high, and I'll be interested in joining in for a move into the low to mid 70s over the short to medium term. But it's a significant candle today, supported by volume as well. So it's definitely noteworthy. All right, guys, that's going to wrap it up. Again, just to kind of reiterate this broad market. It's been a weird couple days of that digestion where you get a strong candle, a strong closing candle, followed by some weakness. Strong closing candle followed by some weakness. So naturally going into tomorrow, I'm kind of skeptical of today's close. As good as the look is, I just kind of go back to this pattern from late August and kind of this following couple days where we bled out. We made it all back up over the following weeks, but it's just something that it's hard to overlook. And I don't want to put too much emphasis on it because, unless we break this 565 level over the next couple days, it's kind of irrelevant, but it is just something to note. And again, 565 remains that key level on SPY, QQQ, low mid 470s, around 476, this low from last week. Break below there, I would expect some digestion, but more importantly, some increased turbulence over the short, medium term. But until then, trend is your friend. Chop is good. Chop is healthy. So far, so good. All right, guys. I hope everybody has a great Wednesday. I'll talk to you soon. Peace.